Hey there, everybody. Welcome back to 21st Century Renaissance and another open interest newsletter breakdown on GameStop. And welcome, I should say, also to the season of the swap expiry. That is the title of today's post, something I think that's going to become increasingly important as we head into these next few months. Probably something, right? A lot of people have been pointing this out. A lot of people have been pointing to this over the past few months, not only months, but years, right? A lot of the original DD on GameStop has to do with this. The legacy DD has to do with swaps. So gonna walk through a little bit of that, at least a little bit of what I can understand in my limited capacities and familiarities with swaps themselves. Before we go ahead and take a look at our regular data, some of our technicals, some of our options data, and try to get an understanding of what we might be looking at heading into this week's weekly options expiry, as we usually do. So that's on tap for today on this wonderful Monday. Hope everyone is having a wonderful Monday. We had a great stream this weekend. If you didn't have a chance to check that out, I'd highly recommend that you do. We had a great time talking through some models of what we think might be coming up this coming earnings period for GameStop. It's going to be an exciting month. It's going to be an exciting March. And for a lot of reasons. So we're going to break down a few more of those reasons today about excitement that we didn't actually have a chance to spend too much time on this past weekend at the stream. So yeah, so let's hop right into it. Before I do that, however, have to, of course, go ahead and give our shout outs. So shout out to Steve Sallow for sponsoring today's newsletter and today's video. Thank you very much, Steve. And to our monthly contributors, Dat Scrufto and Ken Wedmerlin, to generously help and pledge to support offset some of my monthly data expenses. Thank you very much. As always, most gracious, right? Thank you to everyone who has supported in the past and has shout outs coming down the pipe, right? Everything we do here is completely unmonetized, is completely open access, no paywalls, no premium content, nothing like that. So, thank you very much for helping support my continued research here as we try to make sense out of what's going on with GameStop. So, I did a little bit of thinking this weekend, going through some swap data, which some great users have had the chance to put together. I've already talked a little bit about in the past. I've talked about Always Sad But Truthful. Definitely go check out Always Sad But Truthful. I mean, Always Sad has probably the most out there on swap. So definitely go take a look at his work. And go take a look at Matsy. Matsy has a great swap. GME swap data spreadsheet, all compiled, that shows, prices, expiries, notional value, stuff like that. So, went through some and basically looked at this month of March in part because I was trying to make sense out of it. We're starting to get some of these cryptic signals from Ryan Cohen and company. We're getting a look at, this sort of hint back the end of December, maybe pointing towards earnings, maybe pointing towards something to do with swaps, right? Pointing towards March. Do we have suggestions from Roaring Kitty pointing towards March? Don't know. But we do have the kind of 420 stuff, April OPEX. I don't know, what happened we had a lot of swaps actually that were supposed to be due in January, tens of billions of dollars of notional value. Don't know what the character of those swaps were. Don't know exactly, to what degree perhaps did that cause some of our price action towards the end of January to the upside. Hard to say, not sure, not going to speculate too wildly, but what I will say is we do have at least one big pile of legacy short swaps going all the way back to the sneeze that are coming due on March 13th of this year. And those I would suspect, are the legacy swaps, one of the last trades that Bill Huang made. Bill Huang, who was just sent to prison for fraud and market manipulation back on November 20th of last year, and played a role in the collapse of Archegos Capital, of which he oversaw, right? Over leveraged, not correct reporting, right? Secretly, made some trades that were not within margin requirements and the like. So, yeah, Archegos, of course, collapsed back in March of 2021, actually, right just a couple weeks after the second phase or the second return back into the the hundreds of dollars per share for GameStop, right? So this was the several days after the GameStop hearings, right? Roaring Kitty was asked, "Hey, like, GameStop's now trading around $40 to $45. You said that it was a great value at 20. Would you buy it now, right?" Somebody thought he was being cheeky with our pal Keith, and Keith goes, "Yes, yes, I would. My investment approach is aggressive, more aggressive for some, but yes." And of course, the commentator couldn't do anything except go, "Well, just yes or no, yes." And within a few days, of course, GameStop went back up into the hundreds per dollars, and then by March 10th had gone up all the way to $350 per share again, up from a bottom of something like $39, I think it was, and this is pre-split. So okay, so Archegos went down just about 2 weeks after that high. Somehow, this run up to $350 was stopped right at that price level, so something happened there. But interestingly, one of the last trades that Archegos engaged in, right, one of the margin calls which it defaulted on was one from Credit Suisse that March, right? One of Archegos's margin calls that caused the default that March was from Credit Suisse. So very interesting, because of course Credit Suisse also went out of business, right? Credit Suisse also collapsed in March, but 2 years later. And curiously, right, March 15th, 2023, if we go and take a look at GME's swap data, what do we happen to find? We happen to find a trade, a swap, entered in on the 15th of March, an effective date, 15th of March, which expires on the 13th of March of this year. It's a 2-year swap. It has a notional value of $10 billion. $10 billion. It is much larger than most of the trades around it. In fact, it is the largest single GameStop trade I can find in all of the swap data that user Matsi has compiled here for us. And what's very interesting is we have other swaps that are coming due this day, right? We have a lot of notional value, otherwise, other swaps that are coming due. But interestingly, right, these were all entered into back in April and March of 2023, when GameStop's post-split price, of course, the split was in 2022, right? All of the prices at the swaps around this single trade are all in the 20s, right? 20s, maybe a little bit lower, right? They all reflect prices from 2023. What's weird about this one trade that's due, it's this swap that expires on the 13th, so next week, the end of next week, is that the price on this swap is $212 a share. The GameStop, the mark on the share price for GameStop and the underlying is $212 a share, which is not a price, right? This is post-split. Supposedly this swap was entered into in 2023, but GameStop has gotten nowhere near $212 a share since the post-split adjusted price. So this price that's showing on the swap is a price that has to be from 2022. And we don't have any prices from 2022 anywhere near there. But if we go back into the last days of Archegos, what price was GME trading at? In fact, we had a lot of closes right in here around March earnings. Well, just after March earnings, on the day that Archegos indeed collapsed, we do have an opening price that day of around $212. So it seems perhaps like Archegos might have entered into a swap with Credit Suisse in one of their last days. I mean, maybe they entered into it here, early, maybe it was before earnings, but somewhere in here, right, we had a lot of days where GameStop easily, right, swap could have been entered into at that price. Not a lot of days much down the road, but it's possible that Archegos entered into a 2-year swap with Credit Suisse here around March earnings in 2021, collapsed, and then left Credit Suisse holding the bag on this swap, unable to be reimbursed as the counterparty. And then Credit Suisse perhaps attempted to bundle this up and kick it down the road just before they collapsed. So this means that this swap is most likely still in the hands of, well, who knows, right? Who is their counterparty? How is this being packaged? How exactly is this being processed? Whose books are these on, right? Credit Suisse was taken over by UBS in 2023, in March of 2023, after Saudi Aramco, I think, right, stopped being able to give them money to bail them out of this these bad positions. And yeah, so that swap's coming due next week. Will something happen with respect to UBS? Hard to say. Will somehow this have to come onto the tape somehow? Like, what will it mean when this swap expires? What will it mean when, GameStop being priced, way up at $50-something per share now, post-split adjusted, when that short swap actually, when it comes back to life, when somebody's got to be paid. They can't just make it go away. So interesting to see what happens. But we have a lot of other swaps that are coming due all throughout March, not just then. We also have a lot down, right? Richard Newton seems to be correct in pointing out the 28th of March is an important swap date. After earnings, 2 days after earnings this year, we have quite a lot of notional value of swaps. In fact, in March, we have a total notional value of over $51 billion in swaps that are coming due this month. So what's that actually going to mean? Do we see any of that affect our price this month? Have we already seen this affect our price, right? Being able to maybe lower GameStop's price to something a bit more attractive in these previous weeks, right? Was the end of January and February, was this some great 6-week project to lower GameStop's price to maybe deal with these particular swaps, or make it such that they don't cause something like a collapse again, like what happened with Archegos or Credit Suisse? Hard to say, but I want to make sure that this is on our radar, definitely, as something that might be shaping our price action profoundly in the days and weeks to come this month. Now, it might not mean that we just kind of explode to the upside immediately. Not necessarily what I'm saying here, but something to keep in mind, and something I'm keeping in mind, right, with my trades and thinking about my positioning in GameStop this month. So can we get maybe some insight, perhaps, on how traders are playing this? Are there traders taking positions to account for something like this? How is the options market? How is our broader market context kind of shaping up to inform us about whether anyone is potentially bracing for something like this? We can take a look, right? If we look at our broader market context, it does look like we had some pretty steep bearishness. I would say, just kind of to put, you can go read this in more detail if you want to take a look at the article. It's linked down in the comments. But basically, right, what I think is we are still in I'm not seeing our broader, deeper market momentum just kind of based off of this type of movement, this kind of hitchback, be it here or in Bitcoin, in sort of crypto or equities markets. I'm not seeing that sort of momentum rally just yet. So what I think is we do see some primarily options volatility kind of induced kind of hitchbacks that look like recoveries that maybe inspire some confidence in the short term after some fear, only to then kind of drop lower over a period of a few weeks. So as we head into March, we still have the Bank of Japan decision coming up. We still have, right, March 18th, March 19th, which may have some additional impact on the yen carry trade. Insiders may already know what's going to happen with the yen carry trade. We have COVID, I believe it's like PPE and margin loans, low interest loans that are coming due, that we might be seeing this kind of gradual deleveraging ahead of this. If we look out basically in our options market, we do see, right, we can see we're in this kind of more stable territory right now, pre-market. We're not, near one of these really big kind of volatility spiking strikes. So in the short term, looking a little bit more stable than we've seen recently. But if we do look farther out, if we do look at our accumulation of call gamma and put gamma and sort of the balance between those two in upcoming expiries in SPY, we can see that, yeah, short term, looking good going into today, normalized GEX, very call skewed, softens in the sense it kind of gets neutral right now for our daily expiries on the 4th, the 5th, the 6th. Gets a little bit more put heavy on the 7th. Maybe we do see a little bit more stability heading through this week, maybe into next week, depending on how traders play this intra week. The 7th and the 14th are not particularly bullish expiries. They are skewed a bit towards puts, but we don't have, I wouldn't say it's a crazy amount of bearish imbalance. What I would say is that March OPEX is heavily, heavily, heavily bearish, right? We have a very large trader long put gamma imbalance at that strike. And it does project that basically into that strike, we are likely looking at some more downside. Into that expiry, I should say. We are looking at some more downside, even if it's sort of punctuated by or stayed, I should say, by some periods of a bit more stability relative to how volatile that looks. Perhaps even some of that volatility has already been realized based on what we saw heading into early March, but it does look like a little bit of stabilization, a little bit of positioning, a little bit of sort of calm maybe before the storm heading into, basically heading out of this week, heading into the, March 14th expiry, and then really kind of into March OPEX. So keeping that in mind, right, those are those can be periods, those conditions can be and have been, as we've seen, those can be opportunities for institutions to more easily short GameStop, to transpose GameStop's price down through ETF shorting. We saw that basically most of our price action on Friday was very much in sympathy with what was going on in the broader market. This largely looked like most of our buying was driven by ETF flows, right? ETFs connected to SPY, basically rebalancing, balancing, repositioning, right? So just, reacting to general trends within the market. SPY did have this very kind of volatile, crash up, as Spot Gamma has called it, in the end of the day. We saw that in GameStop as well, but of course that was, pushed just late enough that it would not affect max pain strike rate. Still had a max pain finish at 25. Very light options activity, neutral. Shares available to borrow, kind of looking the same. Not really too much movement there. I would say on our technicals, it does look like we are approaching some potentially very deep support. If momentum support is a thing, and that matters, then we are basically, we're a little bit above the momentum low. So if we look at like positioning of our price momentum oscillator, the low that our 20 moving average on the price momentum oscillator is 12.2. No, excuse me, is 12.09. And we're currently at 12.2. So we're hovering basically just above where we had fallen to in October, right? In very late October, before we broke out very violently to the upside in this, this amazing chained 5-week bull trend, right? Technically 6, if you include that kind of doji candle right there. Very interesting to see that. And of course, what is interesting is the price, right? Our 50-week moving average, of course, is very, very similar to our 55 moving average, which Roaring Kitty himself uses as a signal line as on his Rory Kittinger charts, or has used. So taking a look at that and seeing, hey, is this perhaps a way that we can get some insight or some better insight into GameStop's technicals if we zoom out, seeing as how we've talked about how this kind of transposition looks like, we're kind of snipping parts of the price action and then moving it down, a perfect fifth or something, if we're using this image of um, of a musical staff. So, I mean, in that sense, things look good, right? We moved pretty close to the 50-week moving average, and then bounced right. You can see the bottom of the candle there, right? Just came up off of that. So maybe this is a signal that we move into something like this consolidatory period here. Just kind of maybe consolidate in early March, maybe recover a bit more without kind of going crazy. I could see that, right? I could see that at this point momentum being what it is, carries us kind of back into the 20, rather than looking down, trading from like 25-ish to 2350-ish, looking up from 25-ish to 2850-ish, which has been basically what our options market has been framing itself for a few weeks now. That worked out for people who did that back when we hit 2440, just after the, I don't know, was it a tariff dump or something like that? Not sure exactly what it was, several weeks ago. We can see that in our options, right? And what's one thing that signals that to me is, if we're looking at options activity heading into this week, and we look at how traders have positioned themselves on the call side and on the put side, traders did not carry a lot of their put OI over into this week. Accordingly, we don't have that same concentration of put gamma that we've seen in previous weeks. So traders are they are moving their calls over, they're not moving their puts over. Max Payne still sitting at 25, and basically it's still there for most of March. But I don't know if that's necessarily going to stay. It might. Right, we might see basically week after week, we kind of go, okay, we trade up to 2650 or 27, and then come back down, and then trade up again, and then come back down, and then trade up again, and come back down, right? Kind of, if we can see market makers maybe rock things up, get IV, get traders kind of excited in this heightening IV environment, and then ultimately allow the price to kind of move itself back down amid broader market weakness, and then blame that broader market weakness, right? Something like that. But if we take a look at our gamma exposure chart, right, we can see just how much of that put gamma is gone, right? So above us, our call gamma basically staying pretty strong in that 25 to basically up to 28, even 29 is maintaining its character. So right, as the price moves in here, we're looking at stability. We're looking at strength of dealer hedging that reduces volatility in this range. And as far as traders go, we're not seeing traders prep for more downward movement. We're not seeing puts, right? Even in the past, when we saw traders go ahead and open put positions to the downside, which is not a very advantaged trade in GameStop in general, they're very short, right? These were, well, short in the sense of short term. They're very short term. We did not see traders go ahead and open thousands and thousands of puts heading into the middle of March or April or anything like that. It was typically a week or 2 weeks out. Many of them were also mixed with short puts, so they were actually bullish trades. And we see that, even our ratio shifted from about 2 points of call gamma to every 1 point of put gamma to now being down to 3.5 points of call gamma per point of put gamma. So traders heading into this week didn't really set up new put positions. So we don't see worry or fear, I suppose, on the part of the options market heading into this week as far as possible downside is concerned, or really not seeing, okay, if we do have some downside, building a big put position at this point to try to take advantage of that downside doesn't look like it's worth the investment, something like that. We have so many calls on top of us. We have so much call gamma. If we do move up, there's going to be a lot of dealer hedging that kind of yoinks us up, depending on how strong a lot of that hedging is. We can already see we're moving into the 25-50 area now pre-market, with 25 as a large call gamma position to our downside, can offer some intraday support. I would say that by doing that, we kind of move into some grindy conditions in here, which, hey, upward grindiness, not necessarily bad. Options volume will probably pick up if we do that. If we do definitively move into that, that would suggest to me those types of conditions, those would restore some confidence in the options market to take some stronger bullish call bets, and then possibly to ride the this to ride this this earnings IV current that we're currently in. So if we take a look, we can see, not showing here on the 10-day mean IV levels, but certainly Schwab IV still ticking up, right? We've been doing that since mid-February. We've been ticking up, even though our price basically throughout this entire period has been moving down. That's not what we see typically in GameStop. And so if we do actually get some bullish movement, if we do start to move off of 25, if we do start to move into 26, 27, 28 area, especially if we come to within, let's say, striking range of $30, then we will see some profound movements in our IV and accordingly profound movements in the pricing, especially of calls, especially out of the money calls, which are so dependent on extrinsic value modifiers such as implied volatility. So yeah, so I mean, in general, I'm not exactly sure what to expect in terms of when or if this month we'll see some very major movement to the upside. It does seem like we have Ryan Cohen potentially, especially Ryan Cohen, I would say potentially GameStop, the company itself, with this this GameStop website from 2005. Some of these tweets suggesting that we do see some appreciable price action, something potentially major in March, maybe related to earnings right this weekend on the live stream. Definitely go check that out. We have a lot to be excited for, I suppose, in terms of potential forward guidance, maybe earnings related catalysts coming up. The 25th or the 26th of March. Maybe we get some swap action on top of that. Maybe that gets FTD'd and kicked into April, or we have more swaps coming to, not sure exactly what's going to go on there. But I would say that our deeper momentum indicators, our deeper technicals, and currently the position of the options market at the very, very least does not suggest more continued bearishness. At the least, it suggests, maybe trading sideways with IV continuing to move up slightly week after week as we get closer to even day after day, right? We're seeing this into the quarter four earnings report at the 25th to 26th of March. Broader market conditions, right? Maybe some deeper bearishness heading into March OPEX. Maybe this is preparation for potential Bank of Japan catalyst to the downside, deleveraging of the yen carry trade. That's those are the things that are on my radar. But I would say, yeah, some kind of beginning to recover, beginning to maybe head into some lower, what it would be higher lows, even if it doesn't necessarily mean higher highs right away. Something along these lines. And of course, XRT is still on reg show. Where that's going to come into play, who can say? But some things brewing, potentially a calm before the storm, right? This is more or less what we were looking at back at the end of January, back in February, right? We talked about this when things started to get exciting around the 10th and the 14th. This is a little early, right? This is a little IV churn. This is, covering some FTDs, stirring up the options market a little bit to draw in, some suckers, maybe into the options market, getting excited about earnings, but just kind of, too far out still. I think, most likely, right, still kind of flat if stuff, FTD stuff, if there's catalysts, if there's swap stuff that's due, if it can be failed, if it can be strategically failed and can kicked, I would assume that institutions would do this so that they can make as much money as possible on the front end of that. Basically in this high IV mode heading up to March OPEX and then into earnings before having to potentially deal with those catalysts. So yeah, those are my thoughts for now. That's what's on my mind. That's what I'm looking at heading into today's trading, this week's trading, this month's trading. Yeah, thanks as always for all your questions, for all your comments, both on YouTube and on X. Yeah, this was the first live stream we did simulcasting to X and YouTube. So great success. We'll definitely keep doing that. So yeah, have a great day, you guys, and we'll see you. Yeah, we'll see you tomorrow. So take care now.